So I'll make it worthwhile by doing something that's going to be pretty structured, because they kind of clamp down on me. Sometimes I do get carried away and I get to talk for about an hour and a half, and I'm probably not allowed to do that now, because the guy after me will be talking for 3 hours. Okay, so no, but seriously, I need to structure this. In a sense, I'd like to be able to say that you're evaluating something, you're thinking about making that decision. And it's not a decision that you can make on an aisle of a supermarket. It's something that's big ticket, and it's something that can even be permanent for some of you. That's the reason why this is very important, and we feel that we have some responsibility in trying to help you out go through this process. It's a challenging time for the global economy. The first question I have is, will it be a good time to invest in the Philippines? Will the Philippines be a good investment option? Singapore is probably one of the strongest economies of the world, given the kind of per capita income you guys have here. But is the Philippines worthy of being an alternative for you guys? See, that's the question, because many of you are already here. Some of you have this dream and aspiration to come home. So there are basically so many reasons, but we'd like to be able to present such a mindset that if it will be a good option for you, then what option will be best? What alternative investment will be best? And on top of that, if it's going to be a really worthwhile investment option, we'd like to know what are the main considerations in executing on such decisions. And why am I saying that? Why did I start with that? Because we're beset in a world where there's rising inflation, high interest rates across the board because everybody follows the US Fed. There are economic slowdowns all over the place, and one war after another. I think many of you are wondering, like, what's happening to Russia and Ukraine? That's almost like a perma war right now. I don't know if it's going to end. And before that even ended, we now have that Israeli-Palestine-Hamas issue. And it looks like there are geopolitical tensions around the world. In our own little space here in Asia, still a sort of a tug-of-war between the US and China. So we have all of these, and they are reality. So clearly, the option becomes one of stability. If I'm going to invest, is it going to be a stable investment? Is it going to weather the storm? Or maybe, is there any growth potential behind it so that it's worth taking a risk? Like, all investments entail risks, and if ever there would be a higher level of risk, obviously Singapore is one of the lowest risk places around here. But if ever I'm going to be taking another hike on that risk position, will that be worth it for me? And this is the way the world projection goes. A slide before that. Yeah. People are saying the global economy is slowing down, but we have to think about that in a very granular way. I might have to say that, I'm sorry for inundating you with graphs and numbers, but I really want this to be data-driven. I don't want it to be only emotional and only, maybe a persuasive way of making a sway down a certain decision. No, this has to be data-driven. It's right. The global economy is slowing down. The question is, where is it slowing down, and what's going to carry the load in terms of carrying the average upwards? Obviously, the advanced economies are going to be trailing the emerging and developing markets. So if you're going to think, where is Singapore? Is it an advanced economy, or is it a emerging market or a developing market? So where will the growth be? And you know where the Philippines would be, right? But we push that a little more with granularity. The next slide, please. That will show you that, given continents, it's the US and Europe that will be the most problematic. But emerging and developing Asia will be carrying that load. And you know again where the Philippines will be. Next slide, please. If you look at, and this is not just one financial or investment house that's putting on numbers on a local basis. This is ADB, AMRO, World Bank, and IMF. And it looks like they're very, very consistent on where that the growth will be coming from. And that shows you where all of these other countries are and where the Philippines will be. And we're not even talking about Southeast Asia alone. If we're going to be pushing the idea about a global GDP growth ranking, you would see that the blue lines on top, before that purple line, those are the countries that will carry the load and bring that average up, and anything below that violet line, the first violet line, will be the countries that will be growing less. Now, to make it a little more obvious, let me put on board those top 10 countries, or more than 10, but clearly the Philippines is at number 2 globally. And we're saying that the prediction is 5.5, but it actually we've been over that. We're 5.7, and we even consider it a disappointing quarter. Okay, supposedly it should be 5.5 and 5.7 is ahead. We would have wanted to be 6% so that the whole year will easily be 5.5. Next slide, please. And what are the things that contribute to this? Compared to the US, the Philippine inflation rate is already on the mend. The reason why the US hasn't cut rates is because inflation still is a nagging problem. In the Philippines, from late last year, the inflation rate has been trending downwards. The expectation was, because of oil prices going up, they should be at around 4%. We're still below that target 4%. So basically, inflation is not a problem in the Philippines. In fact, the Bangko Sentral, or our central bank, is thinking about cutting rates ahead of the US. But we cannot do that because what will suffer when you do that? It's the exchange rate. So it's not a linear thing anymore. I mean, in the past, when you say it's cause and effect, right? If you have low rates, you can now, if you have low inflation, you can now lower your rates. You cannot do that anymore because you're dealing with it in terms of a global market. And what's gonna suffer would be your exchange rate. So we're watching and observing and hoping that our monetary authorities will be doing something about it at the right time. And it's not only GDP as a whole. It's really that factor side, which is on the supply, labor. The job market looks bright. Underemployment and unemployment are also down. Next slide, please. Now, I'm not gonna paint a totally rosy picture because we have problems, and one of the big problems would be our debt, and that debt position has been rising. Now, the key to debt is this: it's where you use the money. And today, I'm going to be somehow alluding to where the money is going. But as much as a business has to do, it has to borrow at the right time to fuel the capability for growth in the future. And in a country like the Philippines, where would you want to do that? Where would you want to make that spending? It has to be in strategic infrastructure. We are an archipelago, and we'll have problems in logistics. We have problems in movement and services. If we have the right infrastructure, we're going to be doing well. Think about it. I mean, the best beaches are in the Philippines. And mind you, I can put this quite up front. We have better beaches than Thailand. For those of you who have been to the Philippines, much, much better beaches. But the roads and airports to those beaches will make you sacrifice a day or two, right? You don't even remember the vacation, you remember the trip. And how it has made you go through a grueling gauntlet just to be there. Thailand has great infrastructure, even Indonesia with Bali. People in Europe know Bali, they don't know Indonesia and where it's located, right? But Bali, because people can go fly directly to Denpasar, enjoy Bali and fly out. In the Philippines, you want to go to Boracay? You have to go to Metro Manila, you have to go to NAIA, and before you know it, that's a forgettable experience before you even see the beach, right? So that's our problem. And if we can spend the right amount and do something about that, it can help. But let me tell you why we believe it's manageable. It's because a loan basically works if you use it the right way. But the more important part is this: how is that loan compared to your GDP? How is it compared to how you're doing as a country? And if you're going to be overlaying that debt over GDP, we're in a much better position than Malaysia, Thailand, and Indonesia. In fact, we can borrow more for as long as it's gonna go to the right places. Next slide, please. Asia is getting richer. And I want you to know where it's coming from. See that Singapore looks like it's a tail ender, right? Because it's already rich, right? So, see, anything on top of it, you don't feel because that base is big. But the real uptick will be coming from Vietnam and the Philippines. Coming from Vietnam and the Philippines. So, if you're going to be looking at a particular place where the future growth can happen, it can be in a place like these two countries. Next slide, please. And this is something that even Vietnam will not beat us in. It's what we call the demographic dividend, the golden window of opportunity because of our population and how that population is distributed. Our median age up till today is 25 years old. The year we're going to be experiencing a negative growth rate in our population will be 2062. So women are very fertile. Right? Highest fertility rate in Asia, actually. So if you're going to be looking at the future, how many people will be in that economy, contributing financially to the markets, needing residences and places of work, and the number that they need to support, because quite frankly, Singapore is an aging market, right? That's why your benefits for your senior citizens are getting clamped down. Even Japan. Japan originally gave all of its 100-year-olds an award, like a ceramic that's very, very expensive. They stopped it. There are over 70,000 100-year-olds in Japan today, right? In the Philippines, we continue giving senior citizens more benefits like free movies because they're very little compared to the entire number of that economy. So this is going to be the backdrop. Is the Philippines quite a good investment place? I think we can say so. But if you're investing in the Philippines, what will you invest in? So I borrowed this quote from Louis Glickman. It says, the best investment on earth is earth. I guess real estate has always been one of our favorites when it comes to investing. And in the Philippines, it's a little more special. And why do I say that? Because no matter what's happening to the global economy, real estate in the Philippines has become the most resilient asset class in the investment scene. If you're going to be comparing it to the stock market, if you're going to be comparing it to the capital markets, next slide please, you're going to see that all types of real estate, whether that is a condo unit, a townhouse, a duplex, or a single detached, or a house and lot, those are the trends. You look at the stock market at the same period, you're going to see a drop because that's again the global experience. So basically, real estate prices have held in the Philippines. We thought that the pandemic will make this slide. In fact, I heard the word crash so many times in 2020 and 2021. And it never happened, except for a few distressed sales. Eventually, the market held, and guess what? Prices actually went up. To the point where in 2023, the Philippines became the #1 prime residential market in the world. In terms of growth in the world, Philippines became the highest. This is not frank. This is not coming from us. It's a third-party real estate consulting firm globally. And who did we beat? Despite the rhymes, Mumbai, Shanghai, and is that Dubai? Can we check? Yes. Dubai, Shanghai, Mumbai. So the Philippines became the top performer for price growth for prime residential properties, and because of that, everything else followed. Right? It's almost like a halo. Now, I know that there are a lot of benefits of real estate that you guys all know. Some of you are already investors, and some of you are maybe looking at a second or a third unit. But let me go through this because we still need to. Like, what are the advantages of real estate investing? First of all, it's a tangible asset. A tangible asset that you can see, feel, and touch. It gives a certain level of security, right? And the reason why it gets to appreciate it's because it's connected to a thing called inflation as well. Because factors of production, cement, glass, steel bars, they all go up in price when inflation goes up. It kind of follows through that, capital appreciation doesn't happen only when markets are down. In a place like the Philippines, because developers cannot make the same tower at the same price, and prices that somehow, even for towers that are logically within the same area, will be priced higher, even if it has the same components as the first one. Passive income. As an investor, you'd like to be able to come up with passive income. If you have your own residence, why is real estate a good option? Because for one, the real estate yield in the Philippines is much, much higher than Singapore. Okay, as I've said, there is a price for the risk and there is also a price for the growth. And people who would like to be able to have passive income will have to consider real estate investing because clearly the leaseholds, the lease payments are of a certain level. Like in the Philippines, it can still be 5 to 6%. And also because of the supply. I mean, it's always a supply and demand factor, and you know how many we are now. We're over 100 million in the Philippines, and not a lot of people can actually afford these houses, so they actually do rent, and they rent for a long, long time. As Warren Buffett would say, if you cannot make your money work for you, you're gonna work for the rest of your life. So having assets that bring you cash flows will be the most logical way of investing, so much so that you can stop working because you can have money work for you, and you can work because you want to, not because you have to. So that's the advantage of real estate investing. Now this is very important for the Filipinos who are considering this move. It's very different if you are within a community that's conducive, something with a positive vibe and a vibrant set of people within the place. Because even your children are gonna grow differently when they have friends of the kind that you like them to have. There are situations where in the Philippines, enclaves create the kind of associations that you're gonna have for a long time in the future. Even your friends from your childhood days, you remember them because you kind of grew up, you played in the same places, and it's very important that you're in this safe and secure neighborhoods with amenities that can actually get into what we call a higher quality of life. That is very, very important for the people who buy real estate in the Philippines, especially those who are going to be using them. People who are going to be utilizing the real estate. Obviously, fulfillment and enjoyment. I've yet to see someone who earned a lot of money in the stock market going home asking the family to come down to have a picture with stock certificates, right? You don't exactly do that, but when you're in buying a real piece of property, sometimes you create memories in that place, memories that would stand the test of time. And obviously in the Philippines, this is very important. Legacy for generations. Also, I think in Singapore, I can say the same thing. Because real estate is passed on, and more often than not, people or heirs don't exactly sell it just like that. I have a friend who's, like, in fact, the number one stockbroker in the Philippines. And I was wondering, for the longest time, he never had real estate in his portfolio. He's always a marketable securities player. And all of a sudden, at the age of 65, he started buying property. Now saying, oh, quite unexpected of you. Like, you're always in stocks, you're always in commodities and stuff like that. Why buy real estate now? And he said this, and it kind of stuck with me. He said this, Rex, if I go today, I am not really so sure if my money will be there for the next generation. But I have a lot of friends in the Philippines who have generation and generation of wealth, because the cornerstone of all the asset allocation will be property. And if you're going to be looking at this is true. Name me a taipan in the Philippines that wouldn't have property as an integral part of their asset allocation. The wealthy of the wealthy, or the wealthiest of the wealthy in the Philippines, almost always have the prime properties in a given area, whether it's Metro Manila or provincial. The prime properties are owned by the same families for generations. So much so that real estate has been the bastion for wealth in a country like ours. So it's very important that I say this. You know why? Because people can invest in real estate through REITs. If you want the rental yield, no headache, invest in a REIT, right? But in a REIT, you don't actually own the property. It's almost like all of you own the properties, and most of which can be offices, can be malls. They are not in your name. So it's very, very different when you have property in your name, especially for, again, a country like the Philippines. Next slide, please. And this is, I put this last because it's very important, especially for the kind of market that we have and the kind of products that are being offered. Leverage is key, because the return is multiplied because you don't exactly have the same amount of investment. You don't actually pay for real estate 100%. In the Philippines, when you buy primary from a developer, there is either developer financing or bank financing. And usually developer financing is, the more popular one, because they don't charge interest, right? So you actually can put up like 10 or 20% for about 1 to 4 or even 5 years now, depending on the pay term of a particular property that you're going to hold. Which means if the prices go up, it's not the increase over the original price, it's actually the increase over what you have paid. So let me come up with an example, because in my case, like for example, I bought a house in Nuvali. Okay? Not a house, a lot in Nuvali, and I put up a house. Nuvali in 2008 was selling for about 7,800 per square. It's less than 8,000, right? Today, Nuvali is selling anywhere from 45,000 to 50,000 per square, right? In 5 years from the launch of Nuvali, the prices have more than doubled, from 8,000 to 16,000. First 4 years, right? At that time, I only paid 20% for my property. So if I only paid 20% of my property, that actually made my earnings go into multiples of 4, right? So much so that I didn't earn 20% or 40%. I earned more than 100%. Because 8 to 16 is 8,000. I haven't paid 20% of 8,000. So the multiple is very different, right? And I don't know about the property that you're looking at, because the properties have different pay terms. But I guess in all of those properties, you don't have to pay cash unless you want the cash discount. Unless you want the cash discount. Although, looking back at my experience, I learned a lot from the friends that I had. Because as I've said, I bought a lot in New Valley. And I have friends who bought 5 lots in New Valley for the same capital I churned out. Because they just put like 10% across 4 or 5 properties. And on the 4th and 5th year, they sold 4 and their property was free, right? I still have to pay 80% for it, right? So it's a risky move, but again, it pays off. And in the Philippines, especially for the land and houses, this is normally the trend. So if I've answered that it's a right time to invest in the Philippines, and real property or real estate is the right investment class or asset class to be part of, what are the considerations? It's always location, 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 right? It's always those 3. Although I get to review that, I will later on, right? I will, but I'll stay with this and I'll stick to it. And why are we saying that? Because you have to be where, I mentioned earlier, where the strategic infrastructure will be. Because the reality is, the Philippines were so late and delayed in our development. It's almost like the population is already there and now they're building the roads. That's the issue. So now, if you're going to be looking what the roads and where they're getting built, you look at SLEX, that's the South Luzon Expressway. That's the red line. That's coming from the top to this place called Santo Tomas. Cavitex is the Cavite Expressway, connects Cavite, the province of Cavite, which is now part of the metropolis, to Manila. So because of Cavitex, from the Bay Area, as we call it now, you can go to the south. In less than 20 or 30 minutes, you can be in your own place. Calax is the Cavite-Laguna Expressway, which connects Cavitex to SLEX. And Citybex is Cavite, Tagaytay, and Batangas Expressway, which is going to be that dotted line, because it's going to be for future development, but that has already been bid out. North-South Commuter Railway is what's going to connect New Clark City, far up north, to Calamba to the south. So if you're going to be looking at this, right, you're going to see the estates that are doing very, very well. So let me go through this because I might miss out on details here. Vermosa, that one right smack in the middle, is a 700-hectare active living estate in Imus, Cavite. New Valley, as I've mentioned, is 2,400 hectares of sustainable regional hub in Santa Rosa. Southmont, somewhere at the bottom near New Valley, is an 800-hectare elevated modern suburb in Silang, Cavite. Broadfield is 120-hectare campus setting estate in Binyan, Laguna. And Cebu City, 200 hectares of an innovative commercial haven in Cavite. So, as those are developed and those are delivered today, you know which estates are going to be doing very, very well. And the South is really what's hot today because of all of this infrastructure. The North is kind of delayed in that because people are waiting for the airport to be built. And it's getting built as we speak. But Metro Manila is also another story. There was a time when all of us just knew EDSA. It was the only main thoroughfare, and that's the reason why it became a parking lot for most part, right? That's why you get stuck there like 3 hours. Today, there's a bit of a reprieve because of C5. On top of that, the Skyway. You can now move from Makati or Alabang. And I timed this from Makati to Balintawak, something that took an hour and a half using EDSA is now strictly 18 minutes. 18 minutes, only moving at around 60 kilometers per hour. And Quezon Avenue. So this is where you're going to be having all of those transport networks. But another part of strategic infrastructure is transportation network. I think you all know and you probably heard about it, for the longest time we have jeepneys. Jeepneys and buses. We didn't have the effective transport systems, and we're now having them delivered. MRT3, LRT1, LRT2, and the public P2P buses, they're now flying all the routes of Metro Manila. So you now have to know which properties are going to be within this transportation networks. And if you're going to see this is very important. MRT3, LRT1, and public P2P buses are within a network that now has to go through what we call a central station, including a 33-kilometer subway. You know, in Singapore, I mean, how long had your subway? We're heading on first. Okay, it's about 40% finished now, and it's going to be delivered in 2029. It's a subway that will connect Valenzuela to Naiya, to the airport. And as it extends, it will go from Bulacan to Calamba. And where is it going to be converging? All of these, including MRT7. It's going to be converging at a Grand Central Station. So if you have New York Grand Central Station, we now have this. And it's already 83% complete. So this is now real. It's in between SM North and a better mall called Trinoma. Okay? Trinoma and SM North, that's where it's going to converge. That is where the Grand Central is going to be. And guess what? Right beside that is a new estate of Ayala Land, which is Vertis North, of which the upscale development will be coming from a developer that invited you today. So, if these are the locations, let me, as I've said, I'm going to refute that a bit, right? Because it's good, location, location, location. But the Filipinos here will agree with me. Sometimes local governments cannot deliver the infrastructure correctly, right? Sometimes the local government needs a private company partner to deliver, on all of these estates. Sorry, is this the next slide? Sorry, I was about to say, this is the proof. If you're going to be looking at it, BGC and Makati, still the top-notch CBDs in the country. This is a 5-year return. 5-year return that includes the pandemic. So people might be thinking, it's because there was a pandemic. No, even within a pandemic, growth rate in BGC is from 6% to 12%, while Makati is between 5 to 10%. Right? And Makati is now somebody will share that later. Makati is in a state of urban renewal as well to make it even more the central business district of Rampver. Next slide, please. If we're going to be looking at the real estate loans that were granted by banks, you're going to see that there is a growth rate, and the higher growth rate would be places outside Metro Manila. And out of the places outside Metro Manila, Calabarzon will be taking a whole 1/3 of that. The entire 1/3 is also coming from NCR, which means it's still the national capital region. But you know that everything's stacked up going southwards. South is now the key, as we mentioned, because of the strategic infrastructure, and it's getting collaborated with the approvals of the loans of banks. And this is again another proof, even the developers are pushing their limits on creating products that are located in the south. We just mentioned all the estates of Ayala Land, and it's all of these places. So, as we say, Philippines, real estate, location. Now let me get to refute, or probably the good-natured way of saying is add on to that. It's a choice of developer. Location, location, location. If you choose the wrong developer, sometimes that location becomes a negative or a disadvantage in the future. Think Escolta. Think Ermita. think Avenida. These were the plush places of the past. Think New Manila, right? So, the developer has something to do with it because, again, as I've said, sometimes the local government will not spend on it. Makati, for example, you know how much Ayala Land is gearing up to spend just on Makati redevelopment? It's over 30 billion just on Makati alone. As the local government will probably add on a few stuff to that, but not exactly that much. And for the reason that we say, you'll have to know who you're going to be dealing with. And the flip side to this is also this: we're still a third world country. I cannot put this in a slide because somebody from government might listen to me, right? You know, we're still a third world country. Sometimes you can actually buy from a developer where you won't get the title in 5 to 10 years. I mean, you still have to go for the reputable partner because you know that it's still a no man's land as far as the legal side is concerned, and you want to have somebody more reputable, somebody who has been there most of the periods or decades, or even basically a century. And it's a company called the Ayala Corporation. The developer that invited you today is part of this big family. The Ayala Corporation has for its core value drivers the crown jewel, Ayala Land, BPI, more than 100 years in banking, Globe Telecom, the partner that we have for this is Singtel. And lastly, Ayala Energy. If you're going to be looking at market cap, 32.5 billion, 27.5 billion or 1.5 trillion in terms of market cap. And this is not even the whole of it, because we have support businesses of AC Health, Healthway, Philippines Inc. All the hospitals, the pharma, and the clinics are now part of AC Health. We have AC Logistics with Entrego, AC Industrials, Manila Water, iPeople with the schools, AC Infra, and AC Ventures. There is some importance to this that adds on muscle to what a developer can do. But obviously, as I mentioned, crown jewel is Ayala Land, and it's the most complete, the largest and the most diversified property developer in the Philippines. How diversified? Look at the companies that we have. It's not just property development, it's commercial leasing, offices, hotels and resorts, even dorms, and then hospitality and service businesses. It's very crucial to mention this because we own MDC. MDC is a construction company, and it's the biggest construction company in the country. With that is APMC, which is the ace of our sleeves. It's property, services, property management, and it's very important because if you go to Makati, you see the first condo unit that Ayala would have made, and it's called Juan Salcedo. It's right in front of Makati Sports. It's the oldest, but it can actually compete with the newest additions to condos in Makati. That's how good the delivery would have been. Now, why is it very relevant? Because as Ayala delivers, we normally don't do a one-off development. We usually have what we call estates. We're known for a large-scale integrated mixed-use estate approach. Because of all the companies that we control, the banks, the hospitals, commercial, offices, schools, we can put it within that enclave and make sure it's comprehensive in terms of being a township. So much so that a lot of people thought, the valley was too far from Manila. Only to realize in less than 10 years, you're actually thankful you never have to go to Manila anymore. Because everything's complete in that area. That's exactly what happens. And this calling card of sorts includes not just the Makati CBD, but Ayala Alabang, the Cebu Park District, BGC, and Nuvali. That's how we have moved. And today there are 50 Ayala estates, all over the country. It's not just the metropolis. Before, we're known for Makati and BGC. Now, it's all around the country. Next slide, please. So, developer-wise, we have all of those brands, but the brand that's really, in the limelight tonight is Alveo. Alveo is the upscale brand of Ayala. And translated directly, Alveo means living well. So this brand proposition is something that we have seriously taken for residential properties. They have been designed with enough innovation and well thought out amenities that will give you that space to grow. Even workspaces, as we do offices today, this can be a growth proposition for your businesses and employees as well. And lastly, we're also doing districts, right? With Portico, with Circa and Investment Drive, that's in Alabang, and Broadfield in Laguna. Alveo has been awarded multiple times. I guess we have the record today, if I'm not mistaken, to have the most number of awards in a given year. For a company that's barely 21 years old. Okay? Obviously, we have a very, very old parent, but this is a very vibrant and innovative child. Value is at the core of every investment decision. But many of you will have to agree with me. You find the best value, the best deals, when no one's looking. When people are all excited and the euphoria is there, I assure you, prices and deals will be very different. In fact, I'll be surprised to even see deals as I've seen them before 2019. They're not going to be on the table because buyers are going to buy, notwithstanding the situation. But today, there are deals on the table and you're considering some of them. I think it's very important that we know that yes, there are crisis situations, there are very volatile times, but these are also the best times to take investment decisions. Strong brand value, consistently built up over time, for us is a guarantee of future earnings. Alveo has not let people down. I see some of you are multiple unit Alveo owners and you're still here contemplating maybe on a third or a fourth. And we're thankful for that. We're thankful for the loyalty and we're thankful for the commitment and the partnership. I hope I made sense for you tonight. I'll be sitting around the back. I'll be joining some of your tables later on for questions that you might have for me. But there is still another speaker who will speak the details, who will give you details as to what we have in store for you. Ladies and gentlemen, thank you so much. You've been such a great audience. Thank you.
Thank you so much, Mr. Rex Mendoza, for your valuable insights about the macro view of investing in real estate. So now, for our next keynote speaker, he is the Deputy Sales Lead of Alveo Land and will be sharing with us tonight an introduction and a deeper information to some of Alveo